Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. Yesterday I talked about Walmart and came to the conclusion that Walmart is overvalued right now, a lot overvalued right now. And so even if it's a great business, it's not for me. Today I want to look at one of the rivals of Walmart, and this is Kroger, also a big retail chain in the US, but a little bit smaller than Walmart and of course way behind Amazon. We find Kroger here with a market value of around $26 billion. Still one of the biggest retailer in the US, but of course way smaller than Walmart, Amazon or Costco. And when we look at the landscape of the US, then we see here with the blue dots, then we see Kroger is almost everywhere like Walmart too. And so, of course, here is high competition. This is one of the things you have to keep in mind when you invest in retailer. There is really high competition. One of the risks of the business. Kroger right now traded at $35 with a market capitalization of $26 billion, a PE ratio of 10, and a forward dividend yield of 2.08%. And when we look at the long-term chart of Kroger, then we see that it just compound over time with some ups and downs. And then in 2015, it peaked to over $40, but then came back quite a lot and then just lately rise up again to $35. And today I want to answer if it's maybe a good time to buy into Kroger. And therefore, as always, I want to go through the financial numbers of Kroger with you and then also calculate the intrinsic value and come to a conclusion if it's maybe a good time to buy. So let's go. And let's start with the revenue. And the revenue over the last 5 years just grew from $109 billion to currently $132 billion. This is not a high pace growth rate, but it grows over time very good, very stable. I like that. Also, the earnings per share over the last 5 years grew from $2.06 to currently $3.25 with some ups and downs, but overall it just grows over time. When we look at the margins are very slim in the retail business, and so the net margin of Kroger in the last 12 months was 1.95%. When we look on the return on investment, we have 11.76%, that's okay, and a return on equity of 26%, that's good. And also when we look at the free cash flows, then we see that Kroger works on stable free cash flows, very stable, around $1.50 to $2. And then just lately in 2020, the free cash flow exploded like with many of the retail companies. And last but not least, as always, also a view on the balance sheet. And here we see that the debt equity ratio is at 1.31, which means that the long-term debt is higher than the shareholder equity. We have a long-term debt of $12.5 billion and a shareholder equity of $9.55 billion. And so we come to the debt equity ratio of 1.31. That's not bad. If you follow me for a while, you know I like my businesses with a debt equity ratio under 1, but 1.31 is okay. It's not perfect. It's not perfect for me, but 1.31 is not bad and not a big problem. And so overall, also like with Walmart yesterday, we have a very good company here, a very stable, very profitable company here. Nothing wrong with that. And you can be very sure that Kroger also will be there in 5, 10, 15 or 20 years. And that's of course also a very important thing for long-term value investor. So from the financial numbers, from the market shares, from the market position, everything is fine. But of course, that's not all. As a long-term value investor, we also have to find a good buy price, because price is what you pay, value is what you get. So we have to see that we find a good buy price for the long term. And therefore, as always, we have to calculate the intrinsic value. And to calculate the intrinsic value, as always, I go to the Excel sheet of Sven Carlin, the best YouTuber in my view on YouTube. Check out his channel, and also I put a link to this free download of this Excel sheet here down in the description of this video, and then you just can use it and play around with all the companies you want. And to calculate the intrinsic value, of course, first of all, we need the earnings. And with Kroger, I take the earnings per share, and this was $3.25 for the trailing 12 months. And then we need the growth rate, the estimated growth rate for the next 5 years. And I go very conservative with 4% for the next 5 years and 3% for the years 6 to 10. Also, we need the discount rate, and the discount rate is very individual. This is just the expected return you want from your investments. I have an expected return for my investments in stocks of 12%. And then we also need the terminal multiply, and a terminal multiply for a stock like Kroger can be around 15. I think that's reasonable. And when we calculate that together, then we come to an intrinsic value of $43. Of course, when you go to a best case scenario with higher growth rates, with a higher terminal multiply, then you come to a higher intrinsic value, and vice versa when you calculate a worst case scenario with maybe no growth and a very low terminal multiply, then of course also the intrinsic value is very low in a worst case scenario. But so overall, let's say we have a normal case scenario, then we come to an intrinsic value of 43. And so with a calculated intrinsic value of 43 and a current stock price of 35, we can say that Kroger, at least with this calculation, seems undervalued right now. And this is really hard to find these days in the stock market with all the high valuations. And so maybe it's a good time to buy Kroger. I will not, because I'm quite skeptical because of the low margins in the retail sector. So I'm skeptical for the whole sector, especially with a big player like Amazon in the game. If we maybe get a correction or a crash, Kroger comes down to under $30 or even lower, then I think it's also time for me to buy a first position. That's my plan. I will put it on my watch list. If the market give me reasonable prices, maybe under $30, then I will buy in. And just to finish this series of the retailer, I will make another video of Costco, the big love of Charlie Munger. And this will be next. And then we have Walmart, Kroger, and Costco just compared, see what's the best company, of course, and also where is maybe the best investment chance. And if you don't want to miss that, and if you like this whole idea, please subscribe to my channel, ring the notification bell to never miss another video, and then we will see the next time with a video of Costco. And then maybe sooner or later one of the retailer will find a place in my long-term value investment portfolio. And here you just have a short look into this portfolio, and when you look at that, you find a lot of big, boring companies. And so the retailer would fit very good here for the long term. And we will see if sooner or later this will happen. But for now, I'm very happy with this portfolio. And if you're new to my channel, you find deeper analyses to every position in this portfolio. And with this portfolio, I made a performance since the 2nd of December 2019 when I started this portfolio of 58% currently, which is a big outperformance of 33% to the S&P 500 in the same time span. And so all it's about value, all is about the long term. And if you like the whole idea, the whole mindset of long-term value investor, then please like this video, share this video, subscribe to the channel, and follow me on my road to financial freedom. So that's it for today. Thanks for watching. See you the next time with the analysis of another stock, and then also this weekend with a weekly update of my portfolio. See you then. Take care. Bye bye.